Mortgage 101 by rsrmoney.com. Oh, okay, creditsanitizer.com. We can do either one, Josh, whatever you like. Mortgage 101 brought to you by creditsanitizer.com. Mortgage 101. So right now, as general, when people are out looking for new homes or contemplating new homes, what do they go and do? They call and try and do some shopping on loans. What question do they ask most frequently? What's your rate? Now, I've said this many times. The reason people ask what's the rate is, for the most part, they don't do mortgage loans and mortgage shopping on a very frequent basis. So what do they know? They know, let's look at what the rate is. The rate's going to drive the mortgage payment. But since we don't know how much we're borrowing, we don't know how much our down payment is going to be, we're not going to really be able to figure out that mortgage payment. But they look at it and they say, okay, what's the rate? Well, I'm going to give you some guidance here because I've been doing this for decades, and a lot of folks miss a key component. First off, if you're shopping, get whatever you're going to get in writing. Now, until you have a property, or unless you're doing a refinance, no one's going to lock in a rate until you've either got a property to finance. Now, there are some programs out there that will lock in advance, but you're going to pay extra for it. Just call a spade a spade. But you want to do your shopping on the same day. So if you're going to call our friends at Geneva Financial, and you should, you want to call them today, or say call them on Monday, and call XYZ Bank on Monday, and ABC Bank on Monday, and 123 Bank on Monday, all at around the same time. Ask them for a loan estimate. Find out exactly what you're getting. Now, generally that estimate's going to be good for the day, but it's going to give you an idea of what you're dealing with. Now, I will share with you, there are many people, many lenders, that will just strictly lowball you and not give you real good guidance because they figure they're rate shopping, and I don't want to waste my time. Well, our philosophy is, and the reason I've been doing this for so long, have been doing loans for decades, but we've actually been doing the radio show since 2010. You can go to our YouTube channel and see, I think there's about 3,600 videos on there that we've done on loans. So here's the issue. What you want to find out is get a loan estimate, or what we use is actually something that we call a total cost analysis. The total cost analysis is going to show you what the costs are of the loan, because the rate is one thing. So I could say to you, and I'm just throwing a number out there, I could say, well, today's rate is 5%. Well, do I know anything about you? It's like saying, let's go to the doctor, and you go to your doctor and say, Doc, I need a prescription. And he says, okay, here it is. But he doesn't know what's bothering you. Is that prescription going to be any good? Well, you can go and get it filled, but maybe it's not going to help the problem. It's not going to solve the problem because you've got the wrong question, or you don't have the right information to make a good decision. So you start shopping the same day, you get a loan estimate or a total cost analysis, and you compare what are all the costs and fees involved. And you could say to the loan officer, okay, I'm thinking about buying a $750,000 house, and I want to put $150,000 down. What would that cost me? Let's just assume that I've got a 750 FICO score. So you could put and we're doing a primary residence, and here's my zip code. Okay, and the zip code has to do with just loan values and what the lending limits are for that area. That's why you put the zip code in there. Now you can actually do some comparisons. Now, a professional loan officer is going to want to take that further. They're not going to give you the information right there. The professional loan officer wants more information. And when we come back, we're going to talk about the professional loan officer and the info that they should be asking you. If they're not, you might want to get a second opinion from our team. So let's continue. So chatting about the professional loan officer. So why do you want to make sure you're talking to a professional loan officer, and how can you tell that you're talking to a professional loan officer? Well, the order taker, the speed demon, they're just going to throw a rate out there and they're not going to ask you anything else. If they're not asking you several questions to get you to a rate and a strategy, they're really doing you a disservice. So, okay, so you're going to get that loan estimate, and you're going to get either through the loan estimate, the formal loan estimate, or you're going to get a total cost analysis. Why do you want those? Well, you want to see what the fees are that are being charged. Now, on a purchase, if you don't have a purchase contract, and this varies in different areas, I'm going to talk about Southern California right now. For the most part, the seller is going to determine who title and escrow is. So you really can't get a good idea on what those fees are because seller's going to determine it. We can give you an idea, guesstimate based on generic rates from the big providers. But again, you don't know the exact numbers. But you can look at the top of the estimate or on the total cost analysis, and there's going to be an area that says discount points, or it might just say points. It may not say discount points. And the reason that it may not say discount points is you can actually get points paid to you, or you can get pay discount points to lower your rate. What do those mean? So points basically are a method of modifying the interest rate. And I'll give you an example. So several years back, I had a very close friend of mine that had a short time horizon on a loan that she was getting. Well, knowing that, we charged above market price on the interest rate so we could pay for her closing costs. It was called a rebate. Made sense because the payment went up about, I think, $30 or $40 a month. I don't remember exactly. We knew she was going to hold the loan for about a year, and the savings, again, save 30 of the savings on the closing costs was about $3,500. So you look at it and say, okay, am I willing to spend $40 a month, $480 a year for the year to save, I think, $3,500 in closing costs? Makes sense. So we got the higher rate. We have other people, especially right now where rates are high, that say, you know something, I want the lowest rate possible. I'm willing to pay those discount points. So they might pay, I've seen anywhere from 1 point up to 9 points to get a low rate. So, and now both of those scenarios are perfect for the situation. So the professional loan officer is going to go through this conversation with you and discuss how long you're planning on keeping the loan. How long are you planning on staying in the property? What are you doing? Are you refinancing to consolidate debt? Because if you're consolidating debt, we know that we're going to want to refinance shortly thereafter. Right now, interest rates, and I forgot what I looked at, what we talked about this morning, but okay, so we're looking at a 30-year conforming rate yesterday, according to OBMMI. I'm not telling you APRs or anything like that. But according to OBMMI, the 30-year conforming rate was 6.97 yesterday. Can we call that 7%? I know, as sure as I'm sitting here and chatting with you, that if interest rates go down to 5%, anybody that's got a 7% loan is going to refinance. Now, will that happen in the next year, 2 years, 3 years? We don't know that exactly. Do you plan on staying in the property short term or long term? So what we want to know is if we're going to pay those discount points, what's going to be the break even? How much money are we going to save every single month from those points? I've had them as much as $2,300 saved on a $3 million loan. $2,300 per month savings. We just did one in Newport Beach where we showed a savings of about $800 a month. So sometimes you get some significant numbers in there. But what we want to do is divide the cost of it, what those discount points are, divide that by the savings, and that gives us a break even. It's highlighted very plainly on our total cost analysis. If you ever want one, you just give us a call at 800-306-1990, and we'll send that out to you. So you get these discount points and find out what the break even is. And now we are dealing with the professional loan officer who's working on a strategy for you. Because I just shared with you two examples. One strategy was get points paid to you. That's called a rebate. The other strategy was paying points to get to its discount points to get a lower interest rate. Both are great strategies. What are you trying to accomplish? We don't want you to get a loan and say, okay, we're a year down the road and we're redoing it and we haven't hit our break-even point. That's why when I chatted with you just a second ago and said, are we doing a cash out refi for debt consolidation? Our goal there is we're hoping that interest rates are lower sooner rather than later. So we really don't want to pay those discount points. We might even want to look at getting a rebate. So we say, okay, we're going to take a higher interest rate because that way the sooner we can get that refinance and move forward on a lower rate. The cash out refi, the debt consolidation loan, great strategy. But one of the things that it does is there's a cost for doing a cash out refi. There's part of it, the loan level price adjustments. And I'm not going to get into that. I think we've done a video on that in the past on the Mortgage 101 section, but there's a cost for doing that. That's why we want to get this whole thing to you and make sure that you understand the lowest rate is not always your best option. What you need to do is, and we do this in the total cost analysis, we say, okay, here's the rate with the points paid, here's points received, here's par, and let's look at the whole option right there. Bottom line here is get all the information, get the accurate information, and feel free at any time to give our team, if you want a second opinion, and we'll look at it. We'll say, hey, you got a good deal, or have you considered this or that or the next thing? All of those things are part of the process. And if you have any questions on this, always reach out to us. My phone number is all over. You can text us, you can email us, you can message us on any of our social channels. Our team is always watching that. And whatever you do, make sure that you subscribe to our channels as well. And don't miss that as every weeknight, if you're listening to us on ABC Radio, every weeknight at this time, we're on the station right there. And again, not just here in California, our partners at Geneva Financial, licensed in I think 48 states right now. So make sure you're listening to us. That's Mortgage 101, brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it?